So other blocks, there are other blocks. This other block now, there's something called other block here. Yeah. You see, the other block was broken. This other block was broken by this trade. So when it is broken by this trade, it is called a mitigated other block. And there's something also, an other block that has been tested is a mitigated other block. So for something like this now, it has not been tested. So you can easily draw a trade on it down, hoping down to break it. Why to this place that has become a resistance? Market is going to react definitely, but it's just going to pull down a bit. Maybe let's say market is coming back from here, right? Let's say, okay, market is coming back from here. It's going to go there, right? Pull back because it has turned to resistance. You understand this? It's going to go again to go and break it. So eventually it will break it. So when it breaks it, it turns to support, which will now come to this one here that has not been mitigated before. Come down straight, undermining whether all these ones are there. It's going to come down straight to this one here or to this particular one here. This one here is not. So whichever one that is not invalidated is going to come down. Sometimes even push harder, push further down. Am I making sense?
Yeah, with you.
Okay. So this one, what do we call another block? So I'm going to show you in the chat what other blocks are. So you see this one is your head and shoulder, right? That you just saw here. It's the head and shoulder I gave you. So I'll show you what other
Yeah,
block
for a
is.
buy.
Yeah. So this one here, this is a daily time frame. So you can see that this one is another block. This one like this is another block. You can see market came into the zone. Market came in, tested the other block, and went up. But the next time market will be coming in now to test this zone, it's not going to hold it again. It's going to come down
It's coming down.
because it has already been tested. Do you understand? That's what I just explained at the down. So this is another block here now. Then if you go upward, this one here is another block. So you're seeing here like this is another block. You understand? I will call it OB, other block. So this one also is another block. This one like this. But what you look at is what is the volume of this trade? You see it has broken out, right?
Mm.
The trend line has broken out of the trend. So when the trend line breaks out of the trend, we're already expecting a pull up, a retest, which it did here. Then it went up, right?
Mm.
So this
Yeah.
one is very easy. We already know how this one works. A breakout, a retest, wait for a retest, enter on the retest, then you just stay. Put your stop loss below. This one is just going to go up. Then when it gets to this place, there's a probability of it pulling back to this particular zone. You understand? It's going to pull back to this other particular zone. Just come down a bit. It might do as if it wants to come down back. I lie. It won't come down back. So
Fake
that's where
out.
you come up with this trend line also. Yes, it's going to give you a fake out. So you just do a trend line. It's going to do as if it's going to do as if it wants to break out. It will not. Funny enough, it might even come like this, go like this. The way it went, go like this. Go and retest. Then it will do as if it wants to then create something like this, go up, do and do double top, then come here, give another shoulder here,
More
then
of
you see it to come
range.
back
It
here.
will range a bit.
Yes, it will range a bit before it will now come down again to this particular zone. That's what I expected from this trade. So with this now, do you understand what other blocks are?
Now,
Yes,
these
sir.
other blocks, can we call it, what is the difference between the other block and the reversal points? Because where you are indicating those things, they are more of a reversal point.
Other blocks stays where reversal points are now. So I'm just
Okay.
telling you what it's called. You can
Okay.
call it demand and supply area. Yeah, demand and supply area. But
Okay.
in a demand and supply area, you see another block there. And there's
Okay.
something called fair value gap. That's why you see the market pulled out from this side. This is a fair value gap. We already know what a fair value gap is. A gap between three candles, but the wick are not touching. Right?
A
You don't
gap
know?
between three candles.
Yes, sir.
Yes,
Yes,
now
sir.
a gap between three candles, but the wicks of the candle are not touching. That's the fair value gap. That's a valid, this one now is a very, very valid other block. You see that price came into that particular fair value gap. You see the way it moved up. Price came back to the fair value gap. It moved up. So we're going to be doing some technical and mechanical way of trading that will make us stop hitting SL. But it's wrong to be hitting SL every time. You understand? So we're migrating to a very, very high technical way of trading that will not be hitting SL like before. So that's why I said this class is very, very important for everyone to look at. So the next thing
Where
we
is
would,
D1 now?
I already said we're having this class now. So what I want to be doing like this, I don't want to be waiting for anybody. So anybody that is not around would find time to go and study or watch the video. That's why I'm doing this recording. So the video should do its work.
Okay.
Yeah, if you don't understand, you keep watching repeatedly till you understand it. Nobody should disturb me. Just make sure you pay attention because by next month, I might never have time to be doing class like this. I just want to focus and trade. And the kind of trading I want to be doing from next month is the one I will just buy and hold, sell and hold. So imagine I bought from this particular place after entering the trade and seeing my confirmation. Imagine here, it gave a confirmation. I've already checked it on I've been watching this. Yes. Imagine I had it. I just had it since how many days? Maybe I used $20 to buy it, right? So I was waiting for it to come to this zone because I knew it would come on this side, right? That's how many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11. So 11 days on this trade. Then I bought it with, what's it called? 20. So risk to reward on this trade is 2:4. That's almost, what's it called now? Almost
2:4.
2:4. So 20 times 2.4. Let's say, Abi, is that it? 20 times 2.74, right? So that's like 54 USD, 54 times plus your 20. So that's 74. So that's a calm way, like you are just calm. You're not in a hurry to, make any mumu trade. I don't know if you understand. So you just buy, go and sleep. Buy or you sell, you go and sleep, go and relax. You don't stress yourself. So if the more your account grow, the more money you are risking. You don't understand? So and once you do it on your high time frame already, you utilize this particular trade. Just go and take the trade on 5 minutes. You understand? Take it on 5 minutes so that you can have premium what's it called now? You have premium opportunity of taking like here now you can increase your lot size here now because you'll be able to increase your lot size if you are taking it on the lower time frame. You understand? Let me show you what that means. This is on a daily, so it's going to go far. So, but the thing is that you see on this daily, this particular red line, if you're looking at it very well, look at it. This is a fair, are you seeing the fair value gap here? Look at it. On this particular zone, are you not seeing fair value gap? They did not touch.
Yes, sir.
Let me move it. Are you seeing it? This is a very, very valid order block. This one here is a very, very valid order block. That price comes, if price touches it, it will go back. So if you took this trade, it is very sure for you. So you can it will just be going up. So you can go and take it on the lower time frame. It will just be going. You are very, very confident to go. So that's just how it goes. Then this one also, this is another block here. Here to here. So if you look at other block, what did you see? You see trade got there. You see the way it came down, right? The trade just get there. You see the way it came down massively. Another trade went there, it came down massively. You seen it? So we're still expecting trade to go there, and still come down, depend on the reaction trade gets in that particular zone. So we can literally call here a range. You can call it a range. It's safe to say this is a range. Are you seeing it? You see, we just drag it back, right? It's safe to say this is a range. And what is causing that range? And this small hit, this thing here, this green palava, this thing, is causing this whole distraction in this particular zone. So it is a range. You see, why I call it a range is that it's as it came here, it went up, came down, went up, came down. So it's a range. You understand? So we're still expecting it now to go there, come down. You understand? So in regards to that, we'll move on to how are we going to be trading now? Do you understand? That's what we're moving on to. How are we going to be trading now? So you come like this, do your analysis, do your demand and supply, check it out very well. You understand? Then you go to the next time frame, 4 hours. Let me show you what you'll be doing henceforth, not the regular way of trading that we were doing before, not just trend line. So now know what you're actually looking for in the market. It's not just about going to the market and uh, you're using just trend line. So there are a lot of things to look out for in the market to give you a comprehensive trade. And so that you can also be able to trade in within all this jaga that you're seeing here. So what you'll be looking at is that you already know what trend line is, right?
Yeah.
Sorry. You already know what uptrend is. What do we call an
Yes, sir.
uptrend? An uptrend is something that comes like this. Hmm? Then it comes like this, right? It comes like this,
Yeah,
right?
IRS.
Yes. It keeps giving you higher highs. Once it keeps giving you higher highs, that is when you call it an uptrend. See, it now comes down, comes down like this. Instead of it, instead of it to come down, it didn't come down. It came to this particular zone and it could no longer break this high. So it will not stay like this.
That's where the shoulder will
And
be
now
formed.
come to, yes, and now come to break this one. So it automatically tells you markets want to change. So sometimes it comes like this, come and break this one safe. So that automatically tells you market wants to change. So when it pulls back, it's not able to break this, then it gives you this. So once it gives you the, I see a reversal around that particular point. You already know how to trade this particular pattern. So let me not bother you going to that particular point. What I'm trying to say is an uptrend. If you're in an uptrend like this, see something like this, you draw it like this. Another one again, see something like this. You are seeing mitigated order blocks going like this. Hmm? So if the trend was to continue, what you'll be looking out for is anytime you see a mitigated order block like this, a mitigated one, anytime a trade is coming back there, you're expecting the reversal for it to go up. Vice versa, like on the sell, the same thing. If you are seeing that it was mitigated before, it's going up, going up. So what you'll be looking out for is trade that just check that the trade, check to know the trend that the trade is. Like, is it on an uptrend or a downtrend? Once you're able to finalize it's an uptrend or a downtrend, just draw your trend line. As you draw your trend line, or even if you're not working with the trend line or you're working with the trend line, what you'll be looking out for is as it's breaking, what you'll be looking at, you're looking for a buy. So anytime it comes around that zone, you're looking for a buy. Anytime it comes around that zone, you're looking for a buy. You understand? Until you see that it breaks the last low, which is this, until it breaks this one, then you say, okay, change want to reverse. Then you watch out for what we always watch out for, which is this. So maybe you see a bearish move or an engulfing candle in this particular environment, you start knowing you need to short this particular trade downwards, which is here. You need to short it downwards. Put your stop loss above this high. Then you carry your take profits to this particular low here. So it's that easy. You just do it and you go and relax. Except you are trading on 15 minutes or 5 minutes. That's when you will be having, your BP go day up. You look the trade. But if you are if you are trading on if you're trading on 1 hour, 30 minutes daily, 4 hours. Why I say 4 hours, if you're taking your trade, doing an analysis and looking for 4 hours highs, lows, daily to highs and lows, because that's what I've been learning from this guy that I was telling you guys about this afternoon. His trade is on 4 hours. 4 hours, 2 hours, 1 hour. That's what he trade. 4 hours, 2 hours, 1 hour. So he's a swing trader. He doesn't trade just 50. He doesn't trade 15 minutes or 5 minutes or just trade swings. And if you see a proper structure on the higher time frame, definitely you will make money. You understand? That's just what I know right from time on swings. But the bad part is that you need to wait. You need to be a very, very patient person. And so that's one thing. So this is a ranging market. I can't really give you an example here. So we need to go further to check if we see structures. Yes, we see structures. So the structures that you use to recognize the trend you are. So, okay, let me even use this ongoing one. Yes, let me. So, we have analyzed it that it's going up, right?
Yeah.
Right? To this point. Okay. So, what you now as a person will be looking at, let me put it on 1 hour. So, we'll have multiple, we'll see the trend in full, or even 15 minutes. So, we'll see the trend in full. Okay. All right. So I think you can see the chart very well now, right?
Yeah.
We already analyzed where it's going to. So here is where we are expecting it to come. Abi?
Yes.
Hello.
Yes, sure.
We are
That's
here,
the last
sir.
eye.
Okay. So the thing is, when you look at this market, first thing you saw before the trend reversed was that, let me minimize it. So you see the market very well. We are doing this one now without indicator. Are you seeing it?
Yeah.
Yeah, we're doing it without indicator. So this is pure market price, pure price action. You see, you need to just touch three highs. Look at it, three highs. So this, if you are doing the correct trend line, it has to touch three highs.
3 or 2.
So,
You said 2 initially.
yeah, two majorly. Then on the third high, you will know. You still know where. You see that this one there was a fake out here, right?
Yeah.
Are you seeing there was a fake out?
Yeah.
Yeah, but it still came down. So if you were trading on the what's it called lower time frame, you would have chopped SL here because you'd be looking at it to long it. Are you seeing it? You'd have been looking to long it. So that's why the what's it called?
Oh,
The 4 hours, the 1 hour, the higher time frame is still very good. It's very good, but just that you need to wait long. You need to wait long before you get your profits, but it's safer. So another thing you look at is that before this trend line actually happened, you see that there was a trend line. This was the normal trend line that was coming, right? This was the trend line that was coming. Are you seeing it?
yeah.
You saw it now, right? The trend line was coming before this one broke out, right?
Yes.
So when it broke out, you saw it retested.
Mm.
You saw it broke out, it retested. So if it still retest, you see where it retested from. I want you guys to be noticing something. Are you seeing where the retest happened? The retest happened on this high. Are you not seeing it? That's what I want to show you. Are you seeing the retest happen on this high? Eh?
Yeah.
Before it bounced
Sure.
up. So you saw what I was drawing for you just now. You see what I dropped for you just now. Now those high and low that I was drawing just now. You saw it.
Yeah.
So that's what is just playing out here. Now, where is it? Now there be this one now. Where they draw. I think this thing don't make it look like it's an understand. Based on I've taken it to a higher view, so you will not be able to see it clearly there. So but what I'm trying to explain to you is that if you look at it very well now, you see that it is giving you this vibe. You can see the chart very well now. I've zoomed in.
Yeah.
So you would have bought from here. This is a higher time frame. So if you bought on the lower time frame, you would have bought from here. Where is it? You'd have bought from here. The stop loss would have been here because if you break past this, what's the essence? It won't work. So it would have been here. So you'd have bought from here. Then maybe you target 1:3. And where is 1:3? 1:3 would have even be here. So you'd have been looking at getting out on this particular place, this zone. Look at it, this zone. That's where you'll be looking at getting out. You see, that was the perfect spot for the trend line. Are you seeing it?
Yeah.
Why are we getting out from there? Who can explain?
Because there is a OB there.
There's
There
no
is a
OB
zone
there.
there.
There's a zone. What is the name of the zone?
Supply zone.
Thank you. So there's a supply zone in this particular place. You see that market broke out of this resistance. You understand? And it came down. Look at it. Look at it. Market broke out from it. Market broke out of this place and came down. So as market is coming to that particular place that market resists before, it is still going to push it down. How do we call it support and resistance? Any resistance that market, any support like this has become a support because to pass that place. And why wasn't able to pass that place? Because of this place. So you need to be able to look back now. So what we are doing now, I suppose one should have since, but I had to make it simple. But now it seems we can't escape it. Here, this is the reason. This place like this is the reason that as market went to this place, it was pulling up. It's supposed to go up. So it's 1 hour. So if you have taken any trade from here around this zone, you would have still been in profit here in 5 minutes, 15 minutes. If you even use them, make $100. This Jaga place really look like this. It depends on your risk level. So this is the reason. So it becomes a support. You see that trade until it was able to break out. So as it breaks out, it becomes a resistant for any trader is coming back to this particular place. I've explained these things before. So now trade. We're running out of time now. Is it 40 minutes already, Nana?
Almost.
Now, wow, that's serious. 10 minutes to go. So anyway, we'll come back. Because this thing it takes time. I hope you guys are jotting this thing, Sha. Is anybody writing? No. Okay.
Yeah.
The video will be here, no problem. For you guys to, but it's something that I don't want you to disturb my head on. But I just need you to know it so that you know how to follow it. So, and again, you already know the trend line rule. So you'll be working on the trend line rule here. So you'll be working on the trend line rule here. So in addition to the trend line rule, you see that the trade is already going. You know, sometimes when the trade is already going, I will tell you the trade that has moved now. So no need for you to enter, right? Right?
Yes, sir. Yes, sir.
I'm showing you how you can enter a trade even when it is going. Does it make sense?
Yeah, sure.
Okay. So you see that when this one was the first trend line before all other things came out. So when the trend line was coming down like this one broke out of it. So it came to retest this particular zone. So you buy from here on this particular retest since you already know that it has the retest on this particular zone. So after retesting on the particular zone, you buy. It went up. You did 1:3. So if you risk $20 on it, or even let me see, if you take it to the TP, went to what was that? That was almost 1:4. Let's say that's almost 1:4. That's if you use $20 or $10 at least, that's you getting almost a $38, 38 USD. That's what you got from here to this place, 38 USD. That's what you got from here to here. So, but if you entered early, there's one thing I'll still teach you. When you see a market ranging, after market has gone down like this, you see it ranging, chaka, 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 moving to one side. Let me show you something. When market is coming like this, coming like this, like this. It's coming like this. It's coming like this. After it was coming like this, you saw it moving smoothly, was coming like this. All of a sudden, you see the market now moving like this. Yeah?
Okay.
It tells you that this market want to go up. So before you know it will break this one. So immediately break this one, it want to come down, right? It want to come down, but it won't come down to this one again. To not do like this, go up, right? So when it go up a bit, it might likely come down again to not come and touch this place. But that's why you put your stop loss way above the low. It might just come here, touch this place, right? Even after doing it, went up, came down to come and touch this place. So it went up, came to touch this place. It might just come to touch coming for this high that is here, this particular zone. And that's why we too were expecting this particular trade now that has started moving to get to the high, of this one that it started from here, that it started from. So is it making sense? So you need to learn how to open your eyes to see the charts clearly, to know, okay, when and where can I enter this trade? What kind of trend am I? Am I on the uptrend? And anytime you see a choppy market like this, it wants to reverse. You are looking at it, be like this market won't reverse. So that's the only thing it's trying to tell you. Aside the indicators you'll be using to know, okay, there's a reversal, or there's a chart pattern like this, you used to know there's a reversal. Another thing you used to know is that you have a choppy market like this. There are patterns to it. You show it out, except this head and shoulder. So, and how to join in on the moving trade. If you look at this one also, is a move. You look at it, start from here. It came down, right? It didn't break this one. So it came, it did as if it wants to do, it broke this one a little, right? It gave this. See that it didn't break this one also. It went up to this particular level. It broke this one, right? It didn't break this one. So this one, now you see where it landed on this one. Are you seeing it? It landed on this one. So if you already know how the chart moves, right? You will enter from here and you'll be expecting, why will it break it? Because you know you are in an uptrend. So you already have the assurance that this trade will break it. Because you know you're in an uptrend. So after you break it, you'll be expecting it again to come to this place and keep moving up. So it's at the case of where it now moved up like this, you'll still be expecting it. Okay, the trade will come here and respect this zone. That's what you'll be expecting. So you see that it came there. It started pushing up actually, right?
Yes, sir.
So when it was pushing, it was not able to push up, break this zone. You already know a lot of things about it. That when chart start moving very far, you see the rest, it moved a little. This one moved a little, but this one now move very, very far up. When he move far up, he wants to break the trend line. So you'd already have that understanding. When he moves far up, like they just close the trade. So are you seeing many confluences we are using now? Yeah. So you see the confluence we are using. So this is not a trade, or this is not the time that you will now take a trade and you'll be expected to hit SL. If you know what you are doing, you will not be hitting much SL again on this trade. So you see that if you couldn't, get that, you see that when you got to this particular place, it could not break it. So you would have entered here. You would have entered on the second shoulder. And if you enter the second shoulder, you could see that it broke the trend line to this place. And anytime it breaks a trend line, I would advise you, except you're a scalper, sometimes I like this particular, I like catching it first. I will easily quit my account sometimes. So maybe say, I don't agree on my eye because now one of my moments on I teach me this thing. I don't know how not to the player account. But me, it seems this particular place has blown my account more than I can count. But I still want to learn how to catch it first. Because sometimes I like entering, as I see the second shoulder, I like entering to the points where it's this rejection point. Because I know from this rejection point, it will go up. So first of all, I would like making like $20 to $30 from here to here. So once I make $20 to $30 that I made in this trade, I will not put my stop loss at the top, risk it here. So before the trade, I will not be expected to leave the trade as at this particular zone here. That's why I will not be expected to leave the trade. So sometimes it passes, and you see the way it passes. So when I notice that this trade has a long way to go, I might leave it for it to move like this, make it just go. I feel leave it just go. Don't leave it go. As far as say I don't already draw the second trend line. As far as say come break out from this second trend that I draw, I will leave it. Even when it's going up like this, I will leave it. I'll be thinking it's going to come here, right? Yeah. And do another head and come down. That's what I'll be thinking. That's me. It's not what I'll be thinking. That's what I will believe the market want to do. So I'll leave the trade to be going until it comes to break out from this particular trend that I have drawn. So this is the new system of trading. And you might end up holding this trade for like 1 month. One trade, 1 month. You'll be so surprised that you trade. You said?
On a daily time frame.
This is 1 hour. This is 1 hour. Yes, sir. I'm telling you. You might end up holding this trade for 1 month. That's if you feel like. If you feel like. You just leave it, swing it. You just be there. So that's why I said something like, you can just, this is a trade that you hold,